Chummy, let's take a look at the Nasdaq, because according to our friend Ryan Detrick at LPL Financial, the index just touched a major milestone. When adjusted for inflation, the Nasdaq has only recently reached its highest level since the peak in 2000. Dietrich says this suggests more room to run. Let's debate it with the Trading Nation team. Today we've got Todd Gordon from TradingAnalysis.com and Michael Bappas is here from the Bappas Group at Hightower Advisors. Todd, let's kick it off with you. What are you seeing in these Nasdaq charts?
Sure, Eric. Well, the first thing I would see is the chart has made a new high in the notional underlying. So this is the Nasdaq comp. And what you'll see is this is the late January high. And if I do my perfect straight line here, we have broken as resistance, which is now acting as support. However, I would just caution you that the shape of this pattern to me looks like we're seeing sort of a consolidation. There's not as much urgency to the upside. Take any indicator those traders in Trading Nation will look at, and you're going to see divergences. The rate of change is decreasing, so we're losing upside momentum. And then if we take a look at the next chart, which is the QQQ, this is the Nasdaq, you're going to see that the volume has been very unhappy. We're not seeing a lot of volume on the top side here in the Nasdaq. And the last thing, to Ryan's research, take a look at the sector SPDRs. There's 10 major sector spiders that make up those higher indexes, the Nasdaq, the Dow, and the S&P. There's only one, the XLK, of all those XLs that represent utilities and discretion, et cetera, that has made a new high. That's XLK. Everything else is below that January 26 high. So from a sector spider breadth point of view, I'm very cautious. I'm long, and I'm ready to get out soon.
All right, Michael, let's send it over to you. How do you look at the Nasdaq? Do you care about this inflation-adjusted number? Do you care about the all-time highs here? Do you care about the technicals that we just heard about, or are you just focused on fundamentals and individual companies bottoms up? Walk us through your perspective there.
Yeah, I think everything you covered matters. We do focus on fundamentals and individual companies, but it is important to note we're in the middle of a 20 to 40 year technological revolution that in 100 years, people are going to look back on this and say, wow, can you believe all that happened in that short amount of time? We do agree that short term, these indices are not going to struggle. They're going to struggle and not go up as much as they have in the past. We do believe individual names in the indices will continue to go up. I do think next year, this time, the Nasdaq is higher. It will be choppy and volatile along the way.
Okay, I guess that's all we got there. Unless someone else wants to say anything more.
That was so refreshing.
Jump in.
I just enjoyed listening to that. It was such a grand perspective of where I appreciate that. Really do. We are an amazing technological bull run. Near term, we are overbought, but that's a really good point that my colleague brings up.
And the difference between now and 2000 and 2001, whenever, all these companies are making money. Most of these companies have a PE that's a reasonable PE, aside from some of the crazy trading names like, the Netflix and all those of the world that have just gone way, way up. You're seeing companies like, for example, we talked about Alibaba just a little bit ago. They're trading at 37 times next year's earnings. I mean, that's pretty reasonable. Apple, Amazon, a lot of those companies, and they're going to continue to make money. So long term, it's going to be higher. The markets are volatile right now.
If I could just add one more thing, the technological revolution aside, totally agree with that. It's amazing how our lives have changed. But I think the credit quality, this move up in interest rates, this loss of a 4-decade uptrend in bonds, downtrend in yields, that's the source of the volatility, which I think far surpasses these amazing developments technology have come across in the last couple decades. I think that's going to be a key that we got to watch.
Okay.
Near term, I agree with you.
If you have been curious how to make the money when markets fall, please visit marketcrash.money and get some additional information. Specifically, I have compiled some interesting reasons why stock market crash 2010 is a definite possibility, why we could be going for another Bitcoin crash, and more importantly, how to not let the market crash or the Bitcoin crash take advantage of you. Find out how to profit. If you're a new trader or an experienced trader, but you're looking for new ideas, new ways, how to take advantage of the market fall, because quite honestly, markets do fall much, much faster than they go up. So it represents, for a trader, a great opportunity to profit on the opposite direction of the market in a much shorter time frame and oftentimes maximize much bigger returns. So if interested in knowing the ways how I trade weekly options for huge profits as much as 3,800% to 5,000% on certain days, get in touch with me. Visit this link right here, how to profit, read some information, and schedule your consultation. I'll be glad to help out and get somebody on the right track and show you some of my profitable ideas and share some experience which I've accumulated over the last 30 years trading weekly options. Thanks for watching. I hope this was helpful. We'll see you soon.